Mohamed El-Erian, thank you so much for joining us here at FundForum International 2016.
Great pleasure, thank you.
Let's start off by talking about what will make the asset management firms that are here successful in an environment like the one we're in at the moment.
So I think it's a basic understanding that we're living through a very fluid time, where our world is being disrupted from below and from above. From below is being disrupted by technology, by changing patterns among our clients, and from above is being disrupted by the role of central banks, by the emergence of anti-establishment political movements. So understanding that we're living in this very fluid world that has two very different disruptions and what that means for how you do things is going to be the difference between success and failure going forward.
So starting with that lower disruption, as you described it, the sort of the big data, the fintechs of this world, what should companies be doing to evolve?
So first, to understand how powerful this force is. And it's powerful because you get disrupted by people from another world. Airbnb, that now has more rooms than Hilton, didn't know anything about hospitality, didn't build a hotel, didn't manage a hotel, but understood three things that I think our industry has to understand. One is technology and mobility are part of doing business. Two is that people are looking for solutions, not products. And three, people expect to have greater control over their self-destiny. And they understood these three things, and they were able to disrupt an industry that they didn't even understand. And I think these three things are going to play a much larger role. Crowdsourcing, big data, peer-to-peer, robo-advisors, these are all just indications of what's coming in the years to come.
You talked there about people looking for solutions and not products, and that is a massive shift in the mindset for these companies who previously have perhaps seen themselves as a manufacturer, if you like, rather than a service industry.
Correct. And now we have to understand first that our responsibility is to provide solutions. And second, to understand that people want to be engaged differently. They really want to be engaged very differently. The old days where you send out one quarterly report are gone. People expect to be engaged seriously on a high frequency basis. They expect you to be a thought leader. They expect you to contribute something. Otherwise, they will go to a machine instead of using people.
Do you think this industry has been slow to adapt and slow to adopt that, and they're being forced kicking and screaming now, if you like?
I think understandably we've been slow. There's a sense that we are regulated, we are protected. There's also a sense that we provide one of the most important services, which is human skills, and that cannot be disrupted easily. So yes, we have been slow, and we haven't been disrupted as much as media has been disrupted, as much as urban transportation has been disrupted, but we will be disrupted. It's going to be slower, but we will be disrupted.
But at the same time, don't ignore our expertise, is what you're saying, and the people skills that are required to do this well.
Correct. And I think that people have to make a fundamental decision as to what they want to be. Do they want to be a supermarket where they provide the whole range, passive, active, robo-advisors? Do they want to be a very specialized provider of solutions? Or do they want some sorts of partnerships in the middle? But it's really important to have a clear strategic vision as to what you want to be.
Going back to what you said initially, you've got the top disruptors, you said, or the above disruptors. These political climates that we're seeing are quite extraordinary too.
Oh, everything's amazing. I mean, if we were sitting here a year ago and I would have made the following predictions, I suspect you would have thought I was crazy. If I would have said that Trump would be the presumptive nominee on the Republican side in the US, if I would have said that Hillary Clinton would not be able to assert herself until sometime in June, and that she would be in the race against a self-declared socialist in the US, that's remarkable, but that's fact. If I would have told you that we've got nominal interest rates on almost a third of global government debt, that would have been viewed as improbable, if not unthinkable. If I would have told you that anti-establishment movements would gain momentum in so many different countries, we are living through a very fluid world. And it's a world that speaks to the consequences of trying to run sophisticated democracies at low speed. At some point, things start to break, and I think we're witnessing that.
What sort of shifts will we see in the next 6 months, do you think? Because obviously we're waiting to hear about interest rates in the US. That's likely to be after Brexit now, perhaps. What do you think will be significant in, say, the next 6 months in terms of finance?
So our first is going to be, what does the Fed do? And how divergent is it from what the ECB and the Bank of Japan will be doing? We haven't yet lived through a world of divergent central banks. But my sense is that the Fed is tapping on the brakes slowly, while the other two central banks have their foot on the accelerator and they're going to press it even harder. And we're not quite sure as to what does that do to the global economy. We're also not sure about what the growth dynamics look like. Yes, growth has been low, but at least it has been stable. Now there's some concern that growth will become unstable and more uneven. And finally, the impact of anti-establishment movement. We wouldn't be having a Brexit referendum if it wasn't for UKIP. UKIP was an anti-establishment movement that forced an established party to do something differently. And what we're learning is that the anti-establishment movement don't need to get to power to change the politics. Just their influence can change the politics. So the next few months are going to be really interesting.
There was a suggestion here yesterday that those sort of populist politics, if you like, are coming through because of a widening gap between the very wealthy and the middle class, the middle income families of this world. What do you think? Do you agree with that? Do you think that's why it's happening, that there is this huge gap and it's widening?
Oh, very much so. I think not only have we had low growth, but we've had non-inclusive growth. I can speak to the United States, where 100% of the incremental income since the Great Recession has gone to the top 3% of the population. The result of that is anger. People think that it's unfair. The result of that is mistrust. They start mistrusting the elites, whether it's private sector or public sector. So you get the anti-establishment movement politically, but also the private sector. Large companies are having trust issues. So that's absolutely right. At some point, inequality becomes excessive, and it becomes excessive when it's just not an inequality of income and wealth, but also of opportunity, because that's when people get really angry. And I think that is something that we're starting to see all over the Western world.
Incredibly volatile landscape. What do you think people coming to hear you speak today here will be wanting to take away from you? They'll want some advice, they'll want to know what to do next. What will you say?
So I don't know if I'm going to give them advice, but what I hope to do is share with them a framework that not only explains what has been happening and when, but also how to react. Because I think the how becomes much more important. If you don't know what's going to happen, it's really important to have scenario analyses and have some understanding of how you're likely to react. So my hope is first to provide them with a framework, and second, to link that to what behavioral science tells us about decision making. Because decision making under unusual uncertainty is really tough.
Behavioral science, you mentioned it. Big data is a massive topic at the moment, and using that data for sort of behavioural stuff is important too. It's not just for knowing about what's happening financially, but and what that data provides financially, but it's how people behave.
Yeah, and understanding that people don't behave according to textbooks. It's fascinating. When you expose someone to something they didn't expect, very few actually can step up and internalize and change. Some won't even see it, the blind spot. Others will reframe it into something that's familiar to them but has nothing to do with reality. And the third group is the most dangerous. It's called active inertia. They understand that things are different, but they end up doing exactly the same. So understanding the behavioral elements and what that means for decision making is really important.
So the psychologists in these asset management companies are going to do well.
Yeah, and I think people who basically understand how we respond. Now you get over it by building teams, by getting a lot of cognitive diversity that comes with gender diversity, race diversity. There's lots of things you can do, but it's important to understand that it doesn't happen automatically. You actually have to work hard at it.
Thank you so much for joining us. It's fascinating to talk to you, and I hope that the delegates do take away some good tips and advice going forward too.
Thank you.
Thank you.